Today in the grain market, soybeans were easier. It just seems that demand has stalled somewhat, but just for the time being. There just isn't any big headlines that really came out of the U.S.-China talks that would have moved the needle. So markets just continue to move sideways, and it looks like that's going to happen all the way until March 31st. And it seems like that we're going to be waiting on what that report says. Now, the first estimate has come out for the acreage report by ProPharma, and the combined corn and bean acres are at 182.3. That's up 4.8 million acres, and that's what's expected now. So as more estimates come forward, then we'll be able to balance that out somewhat. But so the market seems like it's just going to continue to be choppy really up until then. Now on the option side, April volatility is down to 16.75%, with this $14 strike at 11,000 open interest. It's very possible that that might become like a magnet for the market right now, seeing that the April options expire on Friday. They become a bigger target or something to be watching all the time because of the amount of volume and the open interest in these options. And they tend to move the needle on some futures when there isn't much information out there, and especially as we approach expiration. Now, corn was lower today too. I think the futures are somewhat range bound. Even though China has bought a lot of corn, it seems that it's already in the market, so it hasn't really offered much support or really pushed the market much higher. Now we're of course waiting for planting intentions, but I think the most important number is going to be the grain stocks number. I think that's going to actually move the needle more quickly because planting intentions are really just that, intentions. And as we go forward, things can change, week to week as we start to get into the planting weeks, or certainly as we get further into spring. Now in options right now, the July volatility is at 31.75%, and that's about 0.25% over the May, which is kind of interesting. That just tells me that we're expecting much more movement going forward. And it really is almost unheard of that we're above the 30% point for corn at all. For the longest time, corn volatility has been right around the 20% area. So that just kind of lets you know that they're really expecting a lot more. And certainly as open interest continues to grow, that really adds, more, just certainly more volume to the markets and just more interest in it. That, tends to move it around a little bit. Now, wheat today was somewhat steady. Futures did trade on both sides of the market. It just seems that they're kind of uncertain to market direction right now. This market has continued to fall really since about mid-February, and it's mostly because there has been some rain and some moisture in the plains, and that really looks good for the crop going forward. Globally, there is some wheat out there, and it doesn't just have as much tightening of supplies as corn and beans. So it's really going to take a rally from corn and beans to kind of hook wheat to their wagon to bring it along forward. But today the market moved a little bit sideways, even in spite of the fact that Russia did abandon about 23% of their crop from winter kill. That being said, that just tells you how much wheat is actually out there. Now in option April volatility, it's down to 22.25%, and that's heading into this final week as well. That seems to be about average to where we were from over the last couple of months, but we'll see if we're gonna have any kind of gyrations in the market right now. But it certainly looks pretty steady across the board for all the grains.